Well, good afternoon and welcome everyone to the Kimberlite webinar for perforating and completion fluids. My name is David Batt, President of Kimberlite Research, and I'm glad that you're able to join us today. This is the fourth in the Kimberlite webinar series. Our first webinar in June provided an update on drilling services, including downhole mud motors, MWD, rotary steerables, drill bits, and fluids. And back in August, we hosted a webinar on hydraulic fracturing services. Most recently in September, our webinar addressed the artificial lift market, like rod lift, ESPs, gas lift, and plunger lift, as well as production chemicals. Let us know if you or your colleagues need access to the drilling services, hydraulic fracturing, artificial lift, or production chemicals webinar, and we'll be glad to provide that link to you. Just simply drop us an email or a chat message today. Also, feel free to submit questions during the presentation today via the chat box, or you can email us directly at Kimberlite, and we'll address your questions during the presentation. For those of you that may not be familiar with Kimberlite Research, I'll provide a brief background and then dive into the 2020 Perforating and Completion Fluids reports. Each year, Kimberlite interviews and qualifies approximately 3,000 E&P operators and users worldwide for a voice of customer feedback for our research. About 50% of our research is international, the other 50% North America. Based on these voice of customer interviews, we prepare a series of industry reports that cover formation evaluation, drilling, completion, production, subsea, as well as pipeline inspection and integrity management not shown on this graph. Today, we'll be focused in on wireline perforating and tubing conveyed perforating and completion fluids, based on interviews with completion engineers, completion managers, and completion specialists and advisors. So let's go ahead and dive into the report. In this particular report, we interviewed 348 users globally from over 200 different E&P operator companies around the world, principally during the months of August and September. And these 2020 reports are a continuation of the reports that we initiated in 2017, have updated each year, and so it provides a really good set of trends from 2017 through 2020. So with that, let's dive in. Feel free to submit questions along the way, and we'll be monitoring that. So one of the first things that we like to track is operator sentiment. And as we've reported out in prior studies, due to the market downturn in the industry, we actually saw that operator sentiment for hydraulic fracturing and for perforating had actually declined below the critical 50 number back in 2019 due to all the completion efficiencies and capacity overhangs, and that the artificial lift and the production services segment market is a little bit more resilient. Perforating did move in sympathy with hydraulic fracturing into contraction mode fairly sharply, along with drilling services. However, if you look at perforating a little bit more carefully, remember the 50 mark indices for the diffusion index is no change in economic activity. Above 50 is expansion, below 50 is contraction. What we find is that the international and the offshore markets tend to hold up a little bit more resilient than the North America markets. We observe this both in our drilling services research as well as in our completions research. One of the questions that we ask the E&P operators around the world is, are there any particular improvements they'd like to see in perforating technology? Where does it fall short, or what they want to focus on moving forward? And it's interesting when you take a look at the United States land operators, as depicted here in this graph here for the Permian Basin. The Permian Basin U.S. land operators are expressing their desires to want to use shorter, more compact guns. They tend to have a desire for oriented perforating to try to enhance and get all the shots going in one direction to optimize the stimulation impacts. Whereas what we find when we talk to the international operators, we see deeper penetration as well as the offshore oil and gas operators. We find that deeper penetration and reliability is really at the top of the list and top of their concerns. So it's clear that the U.S. land operators are changing their behaviors, if you will, with respect to the use of guns and shaped charges. Just like we reported out back in August in the hydraulic fracture report, U.S. land operators are adjusting the length of the stages, the amount of chemicals and sand in order to optimize well completion costs. When we look more deeply at what the U.S. land operators are doing for perforating guns and shaped charges and stages, Here in the top line on the left-hand side of my screen, you can see that the average number of stages per well is declining ever so slightly as they lengthen the length of the stage to reduce stages to optimize well cost. But they're actually using more guns per stage. It's just that the guns are shorter, more compact, and as a consequence, there's fewer shaped charges or shots per gun. So the number of shots per gun are going down. The actual number of shots per well is kind of moderating a little bit. The actual number of guns is going up. Now this has had impacts obviously on the market and how this has been shaping up. But what we find when we talk to the E&P operators globally is that the North America land operators continue to have a growing preference for these integrated gun systems. Now with 77% of the North America land operators that we interview citing a preference for the integrated gun systems. And interesting enough, even the international operators and the offshore operators are beginning to come a little bit more on board and preferring the use of these integrated gun systems. Key drivers for their preference for integrated gun systems, when we ask them an open-ended, unaided question, why do you prefer an integrated gun over a conventional gun? Naturally, they're free to cite any benefits which they wish to cite. But what we find is that safety and reliability are really some of the top key value propositions, key drivers for their preference for the integrated gun systems. Operational speed and efficiency certainly follow. For those operators that still prefer the conventional gun systems, what we find is they tend to believe that the lower upfront price is more attractive, even though the total cost of ownership with an integrated gun system and the time savings at the rig site typically will sometimes fall in the favor of the integrated guns, but also just their familiarity. It's what they're comfortable with. About 29% to 30% of the operators globally that we interview expect that their use of integrated gun systems will continue to increase. And when we look at the total size of the market, I think it was quite interesting in the 2019 perforating report published by Kimberlite that the North America land market for gun shaped charges and switches and accessories was about $1.34 billion, of which 68% of the market was comprised by the integrated gun systems at about $916 million. With the downturn in drilling in North America of about 40%, we see a natural decrease in the size of the market, but we see that the integrated gun systems now comprise about 82% of the perforating gun and shaped charge accessory market. So it's still dominating the space. And so just as we shared here, you can see that the number of conventional guns going down, accessories going down, and just kind of looking at the trends, and you can see the size of the markets going down accordingly here. When we ask the E&P operators who they prefer for their shaped charges, it's an open-ended, unaided question. We don't read off any names of suppliers. What we find in North America is that the North America land operators, they tend to prefer Owens and Hunting Titan as their shaped charge providers. Both of these providers have very strong track records and of performance in the market, followed by Geodynamics and Dyno Energetics. Some of the providers like Dyno Energetics doesn't necessarily sell their shaped charges to the open market, but more or less package them with their integrated gun systems. Others put it with their integrated gun systems as well as sell to the broader market. When you go international and offshore, what we find is that Schlumberger and Halliburton have the clear lead in terms of preference for shaped charges. And when we look at the gun systems internationally and offshore, Schlumberger and Halliburton continue to lead in preference for supplier for guns. But when you go back to North America land, you see that Dyno Energetics and Hunting Titan are clearly the preferred gun manufacturers, gun providers in the market, followed by Owens and Geodynamics. In all others, as you can see, there's a lot in all others. And so we find a lot of the wireline perforating suppliers, be it GR Energy, 9 Energy, NexTier, and others, are developing their own integrated gun systems. And so they and many others are encapsulated here in the all other category. When you take a look at who's really kind of calling the shots on specification for shaped charges and guns, what we find in the North America land market is it's about split 50-50, with about 52% of the oil companies indicating that they're heavily involved in setting specifications and providing direction to the service companies, not only in specifications of what they would like, but also in many cases, the brands that they would like. Whereas when you move internationally and offshore, the E&P operators tend to rely more on the perforating service company, which again, when you move into these markets, you're principally dealing in many cases with Schlumberger, Halliburton, and Baker Hughes. When we go and take a look at how the competitive landscape is shaping up for wireline perforating, and we'll start first in the United States land in the Permian Basin, then move international and overseas, offshore. The way we conduct our research with the E&P operators is we'll ask them open-ended questions with respect to which suppliers are they using for their wireline perforating. And so we don't read off the names of the suppliers. There's too many of them to mention here in today's webinar. In total, there were 42 different suppliers cited as being used for wireline perforating in the United States land market. And there was 12 suppliers cited as being used in international land and 10 offshore. You can see in the text box off to the right that the E&P operators are using nearly 2 suppliers on average to meet their perforating needs. But we also asked, in the Permian Basin, there were 30 suppliers being cited as being used. And you can see that companies like Silvertip and others start to grow in their penetration of those markets. When we asked the E&P operators to rate the performance of the suppliers with whom they're using on a scale of 1 to 10, since they commonly use more than one perforating supplier, this is a really good opportunity to get comparative analysis and assessment of performance. But we capture the performance ratings of all the suppliers cited as being used. And what you can see here is, on a scale of 1 to 10, with 10 being outstanding performance and 1 being very poor performance, we see quite a bit of range in the variance in performance of the perforating suppliers. The best performing wireline perforating suppliers are getting average ratings on a scale of 1 to 10, up near 9. The worst performing wireline perforating suppliers on average are getting average ratings around 7 or in the mid to low 7s. So you can only imagine if you are an oil and gas company or an E&P operator. For those of you that know me, you know that I began my career with Chevron as a geologist. That when you're trying to evaluate all the suppliers that are out there, and if you look at this performance trend tile or performance trend map for North America land, and we just have looks like about 8 or so of the suppliers of the numerous suppliers mentioned. What we find is in the 17 survey, the 18 survey, the 2019 survey, and the 2020 survey, that all of the E&P operators that use Halliburton for perforating and rated their performance on a scale of 1 to 10, you can consistently see that Schlumberger is consistently underperforming the market. Their customer review ratings are consistently below the industry average for North America land, which is this dashed line. However, you may find that other suppliers, like GR Energy, receiving customer review ratings that are higher than industry average. You may find that 9 Energy Services here in green getting consistently high ratings. So the point that I'm trying to illustrate here is not all suppliers perform the same. So for any of the oil companies that are listening to this webinar, particularly anyone in supply chain, if you're just going to go with the lowest price provider, you're not necessarily going to come out with the most efficient and the best overall outcome. There's just way too much variability in the eyes of the E&P operators amongst the suppliers of how they're performing vis-a-vis to one another. And we see this large variance in performance, not just with responsiveness to needs in field service execution in the field itself, but we also see it with technical support, the equipment reliability and the quality of the equipment that's going out to the job site. We also see it in availability as well as pricing competitiveness. When we start to translate these supplier performance ratings into this quadrant map, or we call it the value map at Kimberlite Research, where we plot supplier performance on the x-axis, the horizontal x-axis at the bottom of your screen, against pricing competitiveness or pricing strategy on the vertical or this y-axis going up or down, what we find is all the suppliers that plot on the right-half side of this x-axis are receiving customer review ratings that are better than industry average. Keep in mind the midpoint of this x-axis is industry average performance level. So GR Energy, 9 Energy, Mallard, Pioneer, Allied, Silvertip, Perfex, and a host of others that is probably about 25 different suppliers encapsulated in this all others. But all of these suppliers are receiving customer review ratings by the E&P operators that use them that are higher than industry average. all the suppliers that are on the left-hand side of this x-axis, like Halliburton and Schlumberger, who are the big, some of the larger providers in the market, their customer review ratings are below industry average. And as I pointed out earlier, actually most suppliers are consistently below industry average over the 4 years in which we've been conducting this research. If we drill down a little bit more closely into the Permian Basin, since it's such an important basin, what we find is that Schlumberger and Halliburton's performance continues to underperform industry average. Their pricing strategies, they do provide pricing leadership, which is a good thing for the market, to try to maintain some pricing leadership. You see that next here is competitively positioned in the Permian Basin. 9 Energy, Mallard, GR Energy are all competitively positioned in the Permian Basin to continue to grow market share. New private supplier called Silvertip that began operations a couple of years ago is also viewed as delivering very strong value and actually has done a great job in positioning themselves as a premium supplier in the marketplace, providing both not only pricing leadership, but also providing performance leadership. If you take a look and you think about the pending transaction between Liberty Oilfield Services for hydraulic fracturing and Schlumberger for wireline perforating and the bringing together of their hydraulic horsepower, what we see that Schlumberger pricing strategy is in alignment with Liberty Oilfield Services pricing strategy. So if that transaction closes, which we believe it to close, Liberty and Schlumberger will have similar pricing strategies, so that's good. Liberty will need to improve the customer experience and outcome of Schlumberger to move them over to the right to get their performance profile to be in alignment with their pricing strategy. There's a question that came in about how many wireline perforating companies are you tracking in the United States? And in the United States, I believe in total there was approximately 36 to 40 different suppliers, I thought. Let me check here real quick how many suppliers we had in the United States. Well, there was 46 different perforating suppliers cited as being used in North America, 42 in U.S. land, 30 in the Permian Basin. So when we take a look at the coming together of Liberty and Schlumberger, we think that could be a fairly nice pairing, particularly from providing pricing leadership to the market. And if Liberty can libertize the performance of Schlumberger and move them over to the right, that should be a pretty good pairing moving forward. You can see that Halliburton performs pretty well on hydraulic fracturing. It's just that their pump down perforating business performance profile is not fully in alignment with the customer experience that the completions group is providing for hydraulic fracturing. If you take a look at the buying behaviors in U.S. land, what we find is about 45% of our respondents tend to emphasize price really as a key criteria for selection, where the other half of the market tends to emphasize technology or performance as well as service in their key selection criteria of a pump down perforating supplier in U.S. land. When you take a look amongst the performance technology buyers, you can see that Schlumberger is viewed very strongly as cost more but worth it supplier, providing not only pricing leadership but performance leadership amongst this class of E&P operators that most highly value performance and technology. You can see amongst those E&P operators that value service. You can see the suppliers in the top right-hand part of my screen from 9 Energy, Renegade, Reach, Pioneer, Patriot that get high ratings amongst the service-related customers. You can see amongst the customers that most highly value competitive pricing and attractive pricing as a key criteria, tend to treat it more as a commodity. They tend to view GR Energy, Renegade, and Pioneer most favorably. And you can see that Schlumberger and Halliburton are viewed the most unfavorably amongst these class of E&P operators that tend to be commodity buyers for their services. Keep in mind, again, due to the large variance in performance among these suppliers, simply going on price alone will not always yield best outcomes. When you look at hydraulic fracturing, again, you can see that Liberty plots really well for technology buyers and service buyers. Again, just reiterating that the coming together of Schlumberger will be a pretty good fit, both from a technology and performance perspective, if that transaction and when that transaction closes later this year. When we move to the international land market, the market tightens up really quite considerably. There's only about, I think I mentioned about a dozen or so suppliers being mentioned in the international land market for perforating. You can see that Schlumberger is well positioned as the premium supplier with pricing leadership and performance leadership, followed by Halliburton and Baker Hughes. So Halliburton and Baker Hughes both offset their performance shortcomings with more attractive pricing to keep themselves within this fair value fairway that runs diagonally from the northeast quadrant to the southwest quadrant. When you move into the offshore market, what we find here is that Schlumberger, again, has the predominance of the market share in the offshore wireline perforating market. And they do begin to exhibit a little bit of vulnerability to potential customer defection to Baker Hughes and Halliburton in these markets. In large part, Schlumberger's performance profile is not fully in alignment with their pricing strategy. They really need to move further over to the right to fully defend their market position with their current pricing strategies in the offshore market. When we move to tubing conveyed perforating, which is principally used in the Gulf of Mexico about 76% of the time, and internationally and international offshore, what we find is the predominant suppliers for tubing conveyed perforating are Halliburton, Schlumberger, followed by Baker Hughes and Weatherford in the international land market. So when you look at the international land market for tubing conveyed perforating, what we find is that really Schlumberger and Halliburton are really kind of going toe-to-toe with nearly 70-80% of the market share. Whereas if you move offshore, what we find is that, again, Halliburton and Schlumberger comprise the majority of the market, nearly 80-90% of the market share. And you can see that Schlumberger has clearly established themselves as the predominant leader in the market, even though Halliburton was an early leader in the tubing conveyed market. Schlumberger has really emerged as kind of being the premier premium-based supplier that costs more is worth it. Halliburton is viewed as a good value along with Baker Hughes, even though their performance is not necessarily at the same standard or at the same level as Schlumberger in the eyes of the offshore E&P operators that we interview. Their pricing strategies are such that they are certainly viewed as being an acceptable value and an alternative to Schlumberger in those markets. We also updated the completion fluids and wellbore cleanup tools report for 2020. It was published in October. When we take a look at the brines that are being used, you can see in the Gulf of Mexico, principally calcium chlorides and calcium bromides. The zinc bromides typically used for heavier densities required for higher pressure wells in the Gulf of Mexico. When we take a look at the suppliers being used, you can see that in the Gulf of Mexico, Tetra Technologies has a fairly good position of market penetration with a new entrant that's come into the market from New Park Resources. But you can tell that Halliburton is by far has the deepest market penetration and the deepest market share in the Gulf of Mexico. So when you look at the Gulf of Mexico market share, you can tell that Halliburton is continuing consistently the dominant provider in the marketplace. However, when you look at the competitive landscape in the Gulf of Mexico, based on the ratings and the voice of customer feedback from the Gulf of Mexico E&P operators that we survey each year, what we find is that Halliburton provides pricing leadership, which is good. Their overall performance is viewed as being on par with industry average. Customers and E&P operators that use Tetra Technologies for their completion fluids consistently view Tetra Technologies as providing just better overall value, better overall customer experience and performance, as well as very attractive pricing. So Tetra Technologies continues to be positioned to benefit from perhaps additional market share gain moving forward, most probably at the expense of Halliburton, unless Halliburton Baroid adjusts pricing strategy down or improves performance over to the right. New Park, the new entrant into the market, is well positioned as well to continue to provide an alternative to Halliburton in the market, particularly among those customers in the Gulf of Mexico looking for better customer experience and outcomes, looking for alternative values into the market. When you can also see, though, also in the Gulf of Mexico for completion fluids, it's heavily price commodity driven. About 60%, 57% of the respondents tend to most heavily value price, so they kind of treat it as a commodity. And amongst these price buyers, they clearly prefer Tetra and see them as the best overall value versus that over Halliburton. but service buyers tend to see M.I. SWACO and Halliburton in a more favorable light. When you move international land for completion fluids, you can see that M.I. SWACO, Schlumberger, and Halliburton Baroid are by far the market share leaders. You can tell that Halliburton Baroid is competitively advantaged versus that of Schlumberger, M.I. SWACO, in position to gain market share moving forward. And we also see this relationship observed in the international offshore market as well. So that's how the competitive landscapes are really shaping up for completion fluids and for wireline perforating and in the international and the U.S. markets. With the E&P companies you've surveyed, I'm assuming they're larger international companies. Do you see or track a differentiation between the majors and the mid-size and the smaller independents? We do. And so the question was, do the independent oil companies view the suppliers differently than the major oil companies or the national oil companies? And perhaps maybe the best way to demonstrate that is if I just went a little bit off-road here and maybe just went into our interactive software for wireline perforating. If I were to look at Halliburton, you can tell how they plot by year, but if I look at it by company type, you can clearly see that the small to medium-sized independent operators view Halliburton as being really uncompetitive in terms of their overall customer experience and performance. You can tell that the national oil companies and the major oil companies view Halliburton in a much different and a more favorable light than the independent oil companies. Okay? So put another way, if we were to segment Halliburton's perforating performance, say, by different geographic regions, again, you would start to see that North America, U.S. land, they're having trouble being competitive and delivering good value. Whereas in the international offshore and the Gulf of Mexico region, they fall well within the fair value fairway here. Very similar to Schlumberger. As you see, Schlumberger struggles a little bit in North America land. There's nothing wrong with their pricing strategies. It's just that their performance profiles don't align, quite frankly, with their pricing strategies. Whereas, if you were to move into like GR Energy, where they're only going to be present in U.S. land, you can tell how they're viewed as being a value-based alternative. So yes, we do see differences between the small independent oil companies versus the major oil companies. In fact, if we were to go in and take a look at the value map, say in the Permian Basin, for example, for 2020, and we were to look at this through the eyes of, say, the large independent oil companies versus the small to medium-sized oil companies versus the major oil companies, you can start to see how their views and their experiences do vary. So if you're an E&P operator, certainly doing your proper due diligence and your selection of a supplier is critical, regardless if it's perforating, drilling services, completion services, or any oil field services. We see quite a bit of variance in the performance of the various suppliers that we research across all the product lines that we research at Kimberlite Oilfield Research each year. Again, these webinars were originally envisioned to be for the benefit of the E&P operators, but today I know we have folks from service companies attending as well as maybe from some institutional investor houses, and that's fine too. All we're really trying to do at Kimberlite is we're trying to be an independent, unbiased, objective aggregator of these customer reviews so that we can not only track technology trends like we shared earlier with U.S. land operators moving towards shorter, more compact perforating guns with a preference towards fewer shots per gun, with a preference towards orienting the guns to try to get uniform stimulation and reservoir response in the hydraulic fracturing. So we'll track these technology trends on behalf of the industry. We'll also track the performance trends to see if performance in the eyes of the E&P operators is improving categorically as an industry or declining categorically. And then within the suppliers that do provide these services, which ones tend to stand out, if you will. And clearly, as you could tell, amongst the many different suppliers that we track for wireline perforating in the U.S. land market, that there are clearly quite a bit of variance there. So just in summary, if you take a look at what's pending with Liberty Oilfield Services for hydraulic fracturing and Schlumberger, that looks like that could be a pretty good matchup pending that transaction of that deal. We certainly see benefits of the hydraulic fracturing companies having wireline as part of their package to help drive efficiencies on the well site. but we also see that a lot of the independent providers, be it the GR Energies, the 9 Energies, the Silvertips, and others, have clearly carved out a nice little niche of the market where they've been able to deliver distinguishing customer experience and outcomes, and have really established a very loyal following of customers. And they have very high degrees of customer loyalty, as measured by the Net Promoter Score that we track. I'd like to thank everybody for attending the session. If anyone would like to follow up with us offline, we'll be glad to discuss additional observations about the market or address specific questions or inquiries that you may have. For those of you that are E&P operators and joining us today, I'd like to thank you for your gift of feedback. We welcome that. Thanks to you for your feedback. We're able to aggregate this on behalf of the industry. For those of you that wants to contact us, yes, feel free to give us an email. You can check out our website at kimberliteresearch.com. Again, thank you everyone for joining, and feel free to reach out to discuss as needed. Everyone have a great weekend. Bye now.